Global debt has reached record highs. Governments are borrowing more money than ever before. Corporations are taking on massive loans. Households are struggling with mortgages, credit cards, and personal debt. The numbers are staggering. We're talking about trillions upon trillions of dollars. But here's the real question. Why is global debt exploding? And what does it mean for your money, your future, and the world economy? To understand this, we first need to break down what global debt actually means. Global debt is the total amount of money owed by governments, businesses, and individuals across the world. It includes public debt, private corporate debt, and household debt. And it has been climbing year after year. The latest figures show that global debt has passed $300 trillion. That's more than 3 times the size of the entire world economy. Think about that. For every dollar of global output, there are over $3 of debt. So why is this happening? There are several reasons. The first is government borrowing. Governments borrow money to fund their budgets. They borrow to pay for infrastructure, defense, social programs, healthcare, and education. But they also borrow during crises. The 2008 financial crisis forced governments to bail out banks and stimulate economies. The COVID-19 pandemic forced governments to spend trillions on relief packages, vaccines, and unemployment benefits. And more recently, rising inflation and slowing growth have pushed governments to borrow even more to keep their economies afloat. The second reason is ultra-low interest rates. For the past 2 decades, central banks kept interest rates near zero. Borrowing was cheap. Governments borrowed. Corporations borrowed. Households borrowed. It seemed like free money. Why not take advantage? But cheap money always has consequences. When borrowing is easy, debt piles up. People don't think about repayment. They just think about expansion. The third reason is inflation and currency devaluation. When prices rise, governments need more money to fund the same programs. When currencies weaken, debt in foreign currencies becomes more expensive. This cycle pushes governments and corporations to borrow more just to keep up. The fourth reason is war and geopolitical instability. Wars are expensive. Military spending drains government budgets. Reconstruction costs billions. Think about Ukraine and Russia. Think about conflicts in the Middle East. These conflicts don't just destroy lives, they also pile up debt. But it's not just governments. Corporations are also drowning in debt. Companies borrow to expand. They borrow to acquire competitors. They borrow to buy back their own shares and boost stock prices. In fact, corporate debt is at record levels across the United States, Europe, and Asia. Then we have households. Families borrow for homes, cars, education, and everyday expenses. Credit card debt in the United States alone has surpassed $1 trillion. Student loans are crushing millions of young people. Mortgages are becoming more expensive as interest rates rise. This personal debt adds to the global total. Now, let's talk about the consequences. Why should you care about global debt? Because debt is not free. It comes with interest. And when interest rates rise, the cost of servicing debt explodes. Governments that once paid very little on their debt are now paying billions more. Corporations that thrived on cheap loans now face financial stress. Households that stretch their budgets are now struggling with higher payments. Debt becomes a trap. The more you owe, the harder it is to escape. Another consequence is inflation. When governments print money or borrow excessively, it fuels inflation. Your money buys less. Prices rise. Savings erode. And ordinary people feel the pain. A third consequence is slower growth. When countries spend more on paying debt, they spend less on productive investments. When corporations struggle with debt, they cut back on hiring and expansion. When households are crushed by debt, they spend less on goods and services. This slows down the entire global economy. And there is an even bigger danger: debt crises. History shows us what happens when debt gets out of control. Look at Greece during the European debt crisis. Look at Argentina, which has defaulted multiple times. Look at Sri Lanka, which recently collapsed under the weight of foreign debt. When debt becomes unsustainable, nations collapse. Banks fail. Markets crash. People lose everything. So, are we headed for a global debt crisis? That's the $1 trillion question. Some experts say yes. They argue that debt is growing faster than the economy. At some point, the system will break. Others argue no. They say debt is manageable as long as countries keep growing and as long as central banks control interest rates. They also point out that not all debt is bad. Borrowing can be productive if it funds infrastructure, technology, or education that leads to future growth. The truth is somewhere in between. Debt is both an opportunity and a danger. It depends on how it is used. Borrowing to build is different from borrowing to survive. Borrowing for investment is different from borrowing for consumption. But here's the problem. Most of today's global debt is not being used for growth. It is being used to plug holes, to cover deficits, to survive crises. That's not sustainable. So what does this mean for you as an investor or individual? It means caution. It means preparing for volatility. It means understanding that high debt levels make the global economy fragile. When debt is high, small shocks create big waves. A war, a pandemic, a financial crisis, any of these can trigger a chain reaction. Markets crash. Currencies collapse. Inflation soars. Jobs disappear. That's why investors need to think about protection. Diversify your portfolio. Don't put all your money in one asset class. Consider holding safe assets like gold. Consider investing in companies with strong balance sheets and low debt. Avoid businesses that are heavily leveraged and vulnerable to rising interest rates. And for individuals, the lesson is clear. Don't drown in debt yourself. Pay off high-interest debt like credit cards as fast as possible. Build an emergency fund. Live below your means. Because if the global system shakes, the people with the least debt will suffer the least. Now, let's think about the future. Will global debt keep rising? Almost certainly. Governments are addicted to borrowing. Corporations depend on it. Consumers rely on it. Debt is the fuel of the modern economy. But just like gasoline, too much fuel can start a fire. The challenge for the world will be managing debt without letting it spiral out of control. Central banks will play a huge role. They need to balance growth with stability. Raise interest rates too much and debt becomes unpayable. Keep rates too low and inflation goes out of control. The next decade will be a test. Can the global economy handle record levels of debt? Or will we see defaults, crashes, and crises? Nobody knows for sure. But one thing is certain. Debt shapes the world we live in. It affects politics, business, and personal lives. It can build nations, and it can destroy them. So the next time you hear about trillions of dollars of debt, don't ignore it. Because behind those numbers are real consequences for all of us. For your job. For your investments. For your future. The world is addicted to debt. And the bill is coming due.